Tesla shares are down about 1.7% in recent trading at about $423. They are now down 3.9% for the week. As a comparison, the S&P 500 and Dow Jones Industrial Average are down 1.2% and 0.9% for the week, respectively. So again, Tesla stocks have dropped ahead of the earnings that are coming out tomorrow. What's the main reason why? There's really two figures to focus on. The first one, new vehicle registrations, and the second one, trading activity. Let's focus on new vehicle registrations. To make it simple, it's because California new vehicle registration statistics, they look light. It's light in the sense that the volume is low. A company called CrossSell, they compiled vehicle registration data, and they found that although overall third quarter Tesla deliveries hit a record at 139,900 deliveries, Tesla registrations were down 13% year over year in California compared to the third quarter in 2019. These third quarter registrations, again collected by CrossSell, showed 16,200 vehicles registered in the third quarter, which is better than the 9,800 registered in the pandemic impacted second quarter. It's still down from more than 18,000 cars registered in the third quarter of 2019. Why is this significant? Because California represents the largest US market for Tesla. And going back to the numbers looking a bit light, why is there a drop? Well, the main reason is a big drop in Model 3 registrations. It's actually pretty surprising, but California registrations of Tesla's newest vehicle, the Model Y, which is the crossover SUV, surpassed registrations of the best-selling Model 3 sedan. First of all, it's important not to read too much into any single data point from any single quarter. For more context, CrossSell compiled data from 23 states, which it said comprised about 65% of the US market. It found that registration growth in other states offset California's declines, leaving Q3 registrations roughly unchanged at 32,800 vehicles. Besides new vehicle registration figures, there's also trading activity. So again, it's just as likely that Tesla shares are down ahead of earnings because of traders, more specifically, positioning. Traders often will take profits ahead of news, and Tesla earnings qualify as obviously big news. The stock has moved about 10% up or down on average around its past 5 quarterly reports. So traders are likely adjusting their positions ahead of earnings, which are due out again Wednesday evening. Tomorrow evening, analysts are expecting 55 cents in per share earnings from $8.3 billion in sales. You can say that the momentum leading up to this report that's coming out tomorrow, it generally signifies that Wall Street as a whole is pretty optimistic. Now for the topic of profitability. The sharp revenue growth for Q3 is already expected and generally confirmed. A few days after the quarter ended, Tesla said it delivered record quarterly deliveries during the period, with total deliveries rising 43% year over year. Again, Tesla delivered around 139,000 electric cars and produced over 145,000 vehicles in the third quarter. The bigger question is really about Tesla's financials during the quarter, and it's regarding the company's profitability. Keep in mind that Tesla is approaching its third quarter earnings with 4 consecutive profitable quarters. Finally, there's more questions around factory construction progress and vehicle deliveries. In terms of logistics, to deliver 500,000 vehicles in 2020, Tesla would need to deliver more than 181,000 vehicles in Q4 alone. This would imply huge growth both year over year, as Tesla delivered about 112,000 vehicles in the fourth quarter of 2019 and 139 vehicles in the third quarter of 2020. Thanks for watching the Tesla Today Show, and subscribe. Hit the bell notification for more Tesla news and updates.